Hello from Chicago. Alan Knuckman here at the CME Group, high above the trading floor, talking energy with the focus on crude oil today. Down 85 cents, 66.50 was the close today. Rock and roll action in crude. Now, the May crude contract got within 2 cents of the 3-year plus high that was made on Friday. So we got up to 67.74 early in the session, but it was straight down from there from the Sunday night start. We saw it go down throughout the rest of the day. It did hold above 66, which is an important technical area because that was the breakout that we saw last week. So we've seen this market drop today, a little bit of profit taking because of obviously a lot of energy was used to get crude up to take out those highs last week. We're also seeing a shift in the the May contract now moving into June. The May contract comes to an end here on the 19th. 400,000 contracts traded today, which is low. Typically, there's about 600,000 contracts traded. So some of that is now shifting to the June, which will be the front month soon. Sell the fact, like I said, we saw the Syria missiles shot over the weekend, so that event risk was lessened. Now it's a matter of if there's going to be any continued issue over there, any geopolitical concerns. The markets today are taking a little bit of that price pop, that risk off the table there, as they're seeing that there's probably not any disruption risk at play right now as things stand. Now, last week was big. It was $5.50 move last week in crude. It took out that 66.66 level and made new highs, new 3-year plus highs after pushing above that double top, which was significant from the January highs, and then again we saw in March. So it made a nice move, a nice big pop on the week last week. So we're seeing a little profit taking today. Also today, we saw JP Morgan's analyst come out here today. The chief global strategist at JP Morgan said, quote, oil prices of $70 may be the top of the range we're going to see over the next few years. So that's a pretty powerful statement saying that the top is in. Now, technicians are going to disagree. If we can look at this from a price standpoint, 66 again was that double top. If you take the distance of the drop from that double top to those lows at 58, that target's about 75. Also, that 75 level is the midpoint of the larger overall move that we've seen in crude from those record highs above 110 down to below 30. So 75 will be an interesting pivot point that the market may be attracted to. So to summarize, crude today down 85 cents, 66.50 after making new 3-year highs last week.